The European Central Bank is in charge of making the most beneficial monetary policies for the Eurozone. A decision on the monetary policy is made every 6 weeks by the Governing Council after they thoroughly assess economic and monetary developments in the Eurozone. A lot of the policy decisions are aimed at price stability to make sure that the average price level increases by around 2%. In other words, inflation within the Eurozone needs to be kept low but constant. So how does the ECB actually make sure this happens? The standard policy used by the ECB is to control interest rates. The three main ways that can be used to benchmark these are the following. The MRO, which stands for Main Refinancing Operations, is the policy that controls the interest rates at which commercial banks can take money from the ECB. Currently, this rate is at 0%. Its purpose is to expand or contract the amount of money circulating in the commercial banking system. Basically, the higher the interest rates, the less likely commercial banks are to borrow money, and thus less money would circulate, and vice versa. MROs are 1-week liquidity programs, but a similar instrument is the LTRO, which is a 3-month liquidity program. The MROs are used more often as they are used to control short-term liquidity, which allows rapid changes in the financial sector. In contrast, LTROs provide an injection of low-interest rate funding to Eurozone banks. Greater liquidity encourages Eurozone banks to increase lending activities, which in turn generate economic activity. The marginal lending facility is used in order to obtain overnight liquidity from the central bank against the presentation of sufficient eligible assets. Currently, the rate is 0.25%, allowing for money to be taken from the ECB to have a lower rate. The deposit facility allows to make overnight deposits with the ECB. For example, Germany is a country where liquidity is kept low. So the German commercial banks can borrow a lower amount from the central bank, or they place their surplus liquidity in the ECB deposit facility. The Asset Purchase Program is a program which was first adopted in January 2015. Essentially, the ECB is buying bonds from commercial banks. These bonds can be government bonds or corporate bonds. By doing this, the ECB plans on putting more money into the commercial bank's hands and then further increase the amount of money that can be lended and given to investors within the Eurozone. Furthermore, once the bonds the ECB has purchased reach maturity, the money they will render will be injected back into the economy to improve liquidity. Up to December 2017, the ECB bought around 60 billion euros worth of bonds per month. However, this number has halved to 30 billion euros a month to not inflate the economy too much. All of these methods are used to monitor the price levels. The Governing Council has a high pressure every 6 weeks when analyzing the next step in their policies, but so far these methods have been tweaked and adjusted very well to bring Europe to where it currently is.